If you're looking at Korea's financial sector right now, you are staring at a massive fork in the road fintech versus traditional banking. Which track is actually expanding headcount, and what does each employer's financial health signal about your job security through 2027? It's Tuesday, June 23. Let's look at what this means for job seekers and graduates in Korea.
Yeah, it's definitely a pivotal moment to be entering the market.
Exactly. Now, Toss Bank recently signed one MOU with the Solana Foundation to test one-denominated stablecoin remittance, but with broader market pressures reflecting on the hashtag TOSPI right now, how does this single partnership actually guarantee a hiring boom rather than just, an experimental phase?
Right. Well, it's not really an experiment anymore. It's a regulatory race against the clock. Korea's STO framework mandates one stablecoin legalization, which creates an urgent need for compliance, engineering, and legal roles before the February 2027 launch.
Oh, wow. Wait, really? So they're building entirely from scratch then?
Exactly. Because this is completely new regulatory territory. There's just no existing playbook.
Right.
Fintechs literally have to construct this digital asset infrastructure from zero, which forces a massive industry-wide hiring mandate.
So fintech is on a mandatory hiring spree to build new tech. But looking at traditional banks, they can't really afford to play that game right now because Bloomberg Intelligence flags a zero point zero 0.02 to zero point zero 0.03 percentage point CET1 capital erosion for every 10 won, which is about $0.007 at the exchange rate rises. And with the one hitting the 1500 won range, or roughly $1.07, it's like bank capital is leaking like a punctured tire due to government productive finance policies. So should graduates avoid traditional banking entirely?
Not necessarily. You just have to target strategic non-bank growth areas. For example, NH Nonghyep Bank is reviewing the expansion of its Royal Chamber Wealth Management Service to 3 regions, Gangnam, Busan, and Daegu, targeting clients with over 1 billion won, which is approximately 714,000 US dollars.
Right. I mean, because wealth management generates steady fee income based on advising. It totally bypasses that entire leaking tire of CET1 exchange rate traps.
Precisely. You're generating revenue through expertise, not like lending out the bank's own capital. Woori Financial is doing this too, presenting a really strong 13.60% CET1 at investor roadshows in Japan and Taiwan.
Oh, nice. That makes sense.
Yeah, by keeping their capital ratio that healthy, they prove they have the stability to expand wealth divisions while competitors are just, patching their balance sheets.
To secure your career through 2027, you must recognize that true headcount expansion in Korea's financial sector is strictly concentrated in either fintech engineering or traditional banking's wealth management divisions.
While traditional banks cap broad recruitment to protect core capital against exchange rate pressures, they are aggressively expanding high-fee wealth services for high-net-worth clients. Meanwhile, that Bank stablecoin partnership we opened with proves that the frantic race to build digital asset infrastructure is making blockchain and compliance professionals the most aggressively sought-after talent in the market.
That's today's AI PRISM, Careers Edition. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Juan Ifra award-winning series. We'll be back tomorrow.